Patrick, welcome back to F.A.C.E. How are you, my trading warrior brother?
Dale, it's always fun, man. I love these. I love coming on your show there. It's so it feels like a morning talk show for me. I wake up and you guys are already chatting. I join on the call before it's my turn to go, and it's really fun hearing other people talk about the markets.
Yeah, there's a lot of talent on the team. I believe you're a very talented technician, although, you know, at times you remind me of the movie Goldfinger. You love only gold, and I'm with you. I think we're into a capitulation decline now in gold. Maybe we trade 1580 or so, but it's great to have you here after the Fed, Patrick. You want to share your screen, and
Yeah,
perhaps we could get a look at your great charts. Bad charts.
the screen's
Patrick's
disabled.
charts are bad charts.
They're very bad.
They're
Screen sharing is
bad.
disabled.
Oh, someone else, I think Blake left. Let me see. It is. Blake, if you can hear me. Okay, hold on a second. Let me just Skype him.
Yeah, there's a gold right now is I'll show you the charts after, guys. It's the US equities right now. They're entering, or like they already broke down versus the producer price index versus oil versus inflation. And now nominally, they're actually starting to break down. And
Okay,
this, I'll
you
show
could
you
do
a
it now.
100-year chart I have of the SPX or the Dow.
You could share now, Patrick.
I couldn't. All right. Hold on. Let me click again. Share. No. Cannot start sharing. Because somebody else is sharing. So somebody has to stop their share. That's what's happening. You cannot start screen sharing while the other participant is sharing.
I'm not sharing.
I see a screen.
Let me see. Let me try. Let me share, and then I'll unshare.
Okay. There it is.
Now I'm sharing. Now I'm unsharing. Try it now.
Screen share. There we go. Perfect. All right.
All right. 100-year chart.
Yeah, let me pop that up. Just to take, and this is a secret, guys. We have to always take a step back. And anybody who is new to the trading world, and I kind of I was wondering, why do people always look at 6-month chart, 1-year chart, and they don't look very far? And then when you go on Yahoo, Dell, what's the default range they show you of data when you go on Google Finance or Yahoo Finance? I think it's not even a year, right, of data they put there.
Yeah. Yeah, people get used to using a microscope, and you love the telescope. So, you know, there are different kinds of, you're more of an astronomer than a biologist. How about that?
I don't mind doing biology, but first you have to start from if there's no sun to warm up the atmosphere for the microbes to grow and proliferate, it's no use looking at biology, right? So you need the correct macro structure for the biology to work out. And this is the macro. Look, we're in space. It's a black background. This is SPX. Do you see that my screen, guys? Yeah.
Yes, got it.
SPX divided by producer price index, quarterly chart, quarterly candles. So here I have SPX data from 1914 all the way to today. And now you can understand these macro tidal waves, which they come in, they sweep, they take years and years to play out. And what's great about these cycles, once you get those confirmed moves in these cycles, your whole trading career, you don't want to fight that. You want to make sure that your mindset is aligned to be in harmony with these higher capital flows, because they're going to last 10 years. That could be, or even 20 years. Look at the 1929 breakdown. So here's SPX just doing a beautiful bull run, outpacing inflation. The producer price index breaks down. That's it. Once that game over line has broken down, you have to start placing the odds in favor of not playing growth stocks, of playing more commodities, hard assets, etc. Because if you don't have that mindset below that game over breakout down line, you're going to suffer, because inflation adjusted, it took 30 years for the SPX to break even.
Recover. Yeah.
You gotta be careful. You have to understand these things. And if ever this game over breakdown line was a false breakdown, fine. So as soon as the price goes back above previous highs, then you say, okay, my premise, I thought it was a game over breakdown line. Something happened.
Yeah.
The
This
macros.
is not any longer.
That's right. And then you change your bias and say, okay, I was wrong. But look at this. So this line, one, here, I didn't know this upper trend line. Well, okay, this is a channel. So here I have one test at the bottom, 2, 3. So this is a valid bottom rail.
Yeah,
Then in the 1970s, touch here, then breaks below, false breakdown, goes back above, retests. So this line is pretty much valid. Then
that
after
was
that,
the inception of the bull market, August 1982.
Right here, yes.
I know, I was short IBM then, down there. So I remember the day it turned.
And it turned on a false breakdown.
You don't remember because you were only in your parents' imagination if they even knew each other.
Hey, I was 6 years old in 82, Dale.
Oh, okay. See, you seem so young to me.
Still young.
What were your positions? Were you playing with a gold coin?
Jesus, man.
When you were 8? Did your dad give you one or something? Did you know about, man. When did you first discover hard money, Patrick?
Oh, man. Probably in the mid 90s. My parents divorced when I was 12, and my mother, her boyfriend was really into coin collecting, all that stuff, and used to buy me gifts every year of Canadian Mint stuff. And just when you hold a physical coin, we grew up with that. Maybe the millennials don't know. There's something special about holding a silver coin, a gold coin. It's I don't know if it's imagination or it's like a fairy tale or something, but there's something.
It's been around so long.
Yes.
That must be the quality is, you're connecting with history. Rather, if you hold a Bitcoin, what are the replica? You go, well, yeah, it's, what is it, 15 years old?
We have 5 cents.
Thousands of years. Yeah. I feel that way with agricultural commodities, I've been talking about wheat, and it can get biblical. The best commodity trader in history was Joseph, who knew to stockpile wheat because there was 7 years of plenty and then 7 years of naught, which I think we're in. But go ahead, enough of me here. Do you believe that we're in this final washout phase? You want to stay macro here because it is important that gold's testing a triple bottom today.
Okay, well,
but go ahead.
Yeah, well, this is the macro. So now gold thrives when these lines, I could have drawn a line breakdown here. So when the SPX breaks down versus producer price index, that's just the start. Then after that, stuff could get dragged down together. US equities could drag down gold, etc. But gold peaks when it hits the bottom rail, or it hits at least the median line and dips below. So the final washout move in gold, it's possible that we're very close to it. And I'll show you. So right here, we're below the game over line. So for me, until that line is back above here, you have to now stop looking at growth stocks. It's like pretty much over for them for a long time right here.
Growth, and you should
growth
be
stocks. It's done.
How about value?
Yes. So value, anything that's hard, that's real, that starts like that pays dividends. That's based on all that stuff is going to do good. And and they're going to help the SPX and the Dow Jones, because those sectors which are undervalued now, under capitalized, the basic materials or the commodity or the energy, they're going to inflate, and they're going to help the overall Dow or SPX not look as awful, right? It's going to help keep it afloat. So if you want to know when gold's going to detach, so once we're below that, we're now looking for gold to detach from the US equities. And I just put a chart here, this one here. This is the NASDAQ. So the candle chart, monthly candle chart, is NASDAQ. When the NASDAQ closes below its 3-year moving average, in 2001, it took about 1 to 3 months for gold, it's a black line, to bottom and turn up. 2008, hard move down. Then after that, after the close of the NASDAQ below the 3-year moving average, it took, I think, 1 month or 3 months before gold bottomed right here. And this chart I did a while back, it's actually from June. So I think it bounced back, it went back down. I'd have to revisit this. Well, I don't know how many months it's going to take, but gold will detach from this and start pricing in the monetary imbalances required to keep nominally afloat the NASDAQ. And often that's seen, as the pivot, as all that. And I'll show you a chart where this one's pretty cool because you guys were talking about the initial claims, right? Or weekly claims.
Mm-hmm.
And this is, let me find my initial claims chart. This is a chart where I've seen.
So everyone, you could follow Patrick at Bad Charts 1, as you can tell. He puts out a lot of amazing technical stuff, historical stuff, thought-provoking.
Here. So initial claims. Initial claims is when there's a cleansing cycle. So when the inflation rate breaks down, when there's a recession here, all these green overlays here are recessions. Here's the inflation rate going up, breaks down, initial claims go up. And these are actually bottoms for gold. So when the initial claims break out, that's when the Fed starts pivoting because we're in a recession. Now they start cutting rates. That's when gold puts these bottoms here. When these things move up, you see in 2001 here, initial claims, they go down. Economy's cool, economy's hot. Inflation's starting to creep up. What happens? And the inflation breaks down. And this is what people have a hard time seeing. When inflation breaks down into a recession, that is actually when gold bottoms because it sniffs out the easing that's going to come in to save everything. So the Fed, if people are wondering when the Fed's going to pivot, I don't think they're going to pivot before the initial claims start going up. That's going to be the goal sign, initial claims going up. Every time you see they spike up, we're heading into a recession in the 70s over and over. That's when there's the cuts, and that's when gold bottoms. So did they go up, the initial claims number? I'm just waiting. This chart I did a while back there. I'm just waiting for initial claims to start creeping up. And that, in addition to the actual price action of the gold chart, will tell us a lot about when the turn's going to be.
What they can do, ring a bell, Patrick?
I'm going to be screaming everything on Twitter. So if people following me there, they'll get.
Well, I mean, it almost sounds like it's too obvious. You just have to wait until the Fed pivots.
Yeah, you have to also wait.
And then there's a headline, Fed pivots, and that's it.
Well,
and so you don't have to even accumulate before
that
happens.
Gold's gonna sniff it out 1 to 3 months ahead of time. So on the gold chart, gold's gonna start probably moving strong. Here's a gold to SPX chart. Just let me highlight that. I've been tracking this for a while. Gold's gonna show relative strength to the SPX ahead of time. This is the weekly chart with a whole bunch of moving averages. That's a 700-day moving average right up here. As soon as gold breaks out of this line here, this one I probably drew it on the monthly. Let me put the monthly here. Yeah, that one makes more sense. When gold breaks out versus SPX, that's another huge tailwind for gold. And this is probably going to arrive, you're right, before the Fed announces. Because I did a chart a while back. Gold actually bottoms 1 to 3 months also before the Fed starts pivoting.
Mm-hmm.
So
I'll be interested to see what the price of gold is after you get confirmation on these indicators, to see if they were on time or how early or late they were. Be interesting, don't you think?
Look, yeah, here's the gold chart. Gold, until it gets above, I'll even remove all these drawings. Right now, gold looks awful. Until gold gets above this line, guys, this is my wake-up line. Maybe I could even draw it tighter. There's nothing to do here. Stay away. There's nothing. Until it wakes up, you don't know if this is going to happen. It's going to keep doing, like, I don't know. We don't here. There was less support because it had a strong bull run. And the faster it goes up on the way down, it goes as fast until it could hit an area. Let's say I put a vertical ray here. All this zone here was a congestion area. Here's where it stopped, right? So this was the beginning of the stop. It had some resistance, some support right here. Right now, people might start looking down all the way here. But here, what's happening is we're approaching a wall, a previous resistance for support.
Yep.
So we could have the stop. I don't know what number did you mention at the beginning of the interview? 1550?
I think I have a wedge line coming in around 80. 1580.
Sure. Look,
But,
yeah,
you know, you could have an overshoot. It's in the
exactly.
neighborhood, you know, it's in the neighborhood.
So it creates this zone here, and this zone would make sense because that's a historical. Once we broke out back here in April of 2020 above this wall. So this was a 2013 top wall. So with support, critical support, it failed. That is critical resistance. And once we broke above, that was the market telling us something that now this previous resistance is definitely support. And your numbers and the chart, it's telling us, and the market's starting to crash down before gold starts detaching from the SPX. We're probably going to come and retest this wake up line. And then after that, could have a move here.
So do you believe we need a turn in the dollar to get this turn in gold?
Gold will again.
Because there was a period, you were right, and I was looking for a you know, top in the dollar because I was constructive gold, and they both went up together prior to the Russian invasion for about, I don't know, 6 months. They were both going up together. So do you think we need a top in the dollar to?
No. Well, in hindsight, we will need a top, but in foresight, gold again will bottom and turn many months before the DXY breaks down. So there's many examples of this where, let's say in the 2000s, let's look at the beginning. So here I overlaid the DXY. Here's the gold chart. I'll pinpoint exactly. And that's why, guys, you cannot pick bottoms. But look here, this in hindsight in 2001, this was the bottom candle right here. The wick, you can make a case for any of these two. Gold started going up, and that was it. But look what the US dollar actually did. Blow off top,
kept going
double
up
top.
for a while. Yeah.
Yes.
Then it came apart.
But if people wait for the DXY to break down, just like if they wait for the Fed pivot,
they miss half the move.
They're too late.
Well, they're not too late. It kept going, but you know, they missed a good piece of the move.
Yeah, and that's fine also because you want to find a sweet spot, right? You want to let the trend build. You want to have some bullish momentum to confirm the trend is active before, because, you know, it's always fun bragging rights. Oh, I called the bottom. But as a trader with risk and money management, I can't really buy here with like guessing it, right? You have to wait for at least a trend line to break out, but gold's going to start breaking out. See here, it broke out, retested, and still the US dollar didn't break down.
Where's major support in silver, Patrick? We have about 9 minutes to go, and the gold silver ratio still looks kind of negative to me. I want to get your silver outlook here.
It's not good here.
Silver.
I have a potential arc for silver, but until you could forget this there. This is the line. This is my wake up line, guys. If you want to do the easiest TA possible, all I need is 2 lines. I need hold on. If I dumb it down, I have this line called where's my template? Sleep mode line. Here's my sleep mode line. Do you
still believe silver is going to outperform gold?
Definitely, but not before gold breaks out versus SPX. This is it, guys. Look, I'll show you what silver tracks. Where's my gold to SPX chart here? Here's gold to SPX. Here, I'll just overlay silver. And then, guys, that's why I'm telling people on Twitter, no use to look at gold, at silver, or the miners. No use, guys. No use until gold breaks out versus SPX. Because look, below this, the candles is gold divided by SPX, and look what silver does, guys. It tracks those capital flows. Look at that. Silver is tracking a ratio. That ratio is defining capital flows. So silver, until gold breaks out here, there's no chance for silver. No chance. Nothing's going to happen there. It could go sideways. It could start prepping, you know, creating a nicer base, a double bottom, a higher low, stuff like that, you know, preparing the setup. But the actual breakout and the sustained move that's going to bring us and enact a 10-year bull run for silver is when gold breaks out versus SPX. Look, see when that early breakout line was, and gold had to move a lot off the bottoms in 2000 for even silver to start moving up. And then after that, once gold breaks out, retest, look what silver did. Outperformance. Gold went sideways versus SPX, and silver just rocketed upwards, pricing in the destruction of purchasing power. So adding zeros to everything to save nominally the indices. And that's always a recipe, right? What they can't do in real growth, they jack it up with fake growth, inflation.
Well, you know how they could do that if they wanted to. They have to break the dollar. Okay, so if they broke the dollar, everything in nominal terms goes up because the dollar's
Yeah.
weaker.
Yeah.
That's how you get your first 20-30% off the lows in the markets. The dollar came off 20-30%. So it really wasn't, it was all nominal for most of these major lows for the
It
first part of
helps.
the rally, all nominal.
exactly like here.
So, yeah,
Purchasing power, Dale, it's US dollar strength. So it's a nominal dollar and inflation. So if the dollar loses strength versus
yeah,
other currencies, normally it helps. And if there's inflation on top of that on your US dollar, because the US dollar could go up and have inflation. We're having it right here, right? It's getting
yeah.
strength versus the yen versus the euro, but there's high inflation. So that's probably helping the gold price stay, not go
Well,
further down than it was going. It's all about purchasing power. If I could show you just one chart, purchasing power. Here's a purchasing power, remove indicators. Here's a purchasing power, and that chart is exactly, and I'll put the silver chart because silver was not pegged prior to 1971, new price scale.
yeah,
And look at this, guys. Look at that. It's the inverse. You see the silver going up?
yeah.
If I do an invert the scale of the silver, it tracks your purchasing power. Yes, there's spikes. Of course, that's why we use SPX divided by PPI. When there's a breakdown,
Right.
silver's cheap. You buy it, because people always compare silver. It's not above its 1980 peak. Well, yeah, that's a peak, end game, bull run peak. You can't measure by that. If I would have put a moving average of silver here, look how it tracks your purchasing power very well. I could have put US oil, anything real, value. If you want to come back to value, anything real. Look at the
Oil.
I'll do
Yeah.
invert scale of the oil chart on log. Look
Yeah.
how it tracks oil. Also tracks to perfection your purchasing power. So the more
Yeah.
your purchasing power goes down, the more oil, silver goes up, and gold would have been the same thing. Look at this. And this is data from the Fed. They're not even hiding the fact that the purchasing power, they're destroying it. It's their own recipe. It's and they're going to keep doing it. It's just
Well,
a
if they
question
want
as
to
a
finish the
trader.
job, they turn the dollar. That'll finish the job. So, you take the
Yeah.
Dixie down to 70, that would finish the job. So
And
Patrick, you want to show you, oh, okay, go ahead. What's that?
Yeah, and that's why people have to see the strength in the US dollar as fuel. It's a fuel reservoir. A strong US dollar is always present at the beginning of a bull era in commodities, not at the end. At the end, the dollar will be weak, guys. Think about it this way. The higher the US dollar now, the more fuel, the more the powerful the bull era will be in precious metals as it unwinds, like Dale said. That's how I want to see a DXY 113, 120, really. Like you're going to a racetrack for long, like Le Mans.
I'm hearing 116 will make new. We'll take that 114 recent high out. We'll trade.
Sure,
116.
why not? As it could go wherever it wants, but once it starts breaking down and gold starts breaking out, that's the winning combo. I just want to add this there. This is a 7-year rate of change for your purchasing power, guys, and it broke down from a 40-year base, guys. Never seen before. Here, look at this beautiful top in purchasing power destruction. And it's accelerating here, the purchasing power destruction. So hold on tight, guys. This is something we've never seen before, or the last time.
I have.
It's 1970s.
I remember it. Parts of the 70s, but I remember 1979, Russia invades Afghanistan, gold's trading 880. That was the end of the gold move, and silver was $50, 1980. That was, a bull market that didn't restart for 20 years.
And we're right there, guys. We're right there, guys. It's crazy.
Okay.
It's happening before our eyes. It's unfolding.
Yeah, why don't you show your website?
Sure,
Patrick, so people know how to follow you. If you have any offers for any of the viewers or attendees.
Yeah. Well, this is our website, guys. Look, on Twitter, everything's free. I do the macro stuff. Just go follow me on Twitter, and it's fine there. For those who want to track us, me and Kevin Wadsworth, North Star Charts, we have a website. We have currently 50% off for the whole month of November. And but we're there for everybody. So that difference there in Twitter, limiting characters. But for our members, we're always there. And we put the actionable charts. They're all our trades, everything we do there, they're all available on the website. But guys, if you don't want to worry about it, just go on Twitter, have fun there. And
you're a great guy, Patrick. You have a giving spirit. You give a lot away for free. And you and Kevin proved the math that at times 1 + 1 can equal 11. Not just 2. All right, buddy. So that's my endorsement. I love their work. If you don't know about them, follow them. And Patrick, always rooting for you and Kevin. Have a great fall trading season, and always look forward to talking to you next time.
All right. Thank you, Dale. Appreciate your time, man. Thanks, guys.
All right, Patrick Karim at Bad Charts 1 on Twitter, and it's Bad Charts 1 North Star is where you can find them. So people are thanking you, Patrick.
Thanks, guys. I'll stop the share now. Bye.
All right. So everyone, you could, 82. I remember. Let's see. Let's go to don't just count your pips, count your blessings, everyone, and you can join the team in 15 minutes for the morning edge. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.